Why does it always seem like the amount of money we owe grows bigger, but our checking accounts don't grow in the same way? It's all in the interest rates, something we all talk about in here, but no one actually sits down with you to explain what's going on. The good news, they're pretty straightforward to understand. The bad news, they can impact your life in a lot of different ways. Let's break it down. Hey MoneyLion, my name's Austin Hankwitz, and I talk about personal finance and investing online. I grew up in a small town in Northeast Tennessee and didn't know a thing about interest rates until I opened up my first savings account. So let's start with the easy stuff, right? What is an interest rate? It's the cost of borrowing money or the reward you receive for saving it. Right, you may be borrowing money for your first house or to get that cool car, but borrowing money isn't free. You normally have to pay a fee on top of that, normally expressed as a percentage called an interest rate. On the other hand, banks are actually borrowing money from you when you leave cash in a savings account. Right, you're letting the bank borrow money in the form of your deposits, and they're paying you interest for the use of it. And this use is usually them giving out other loans. That's pretty simple enough, right? But who sets the rate percentage? The Federal Reserve does. The Fed changes interest rates to manage inflation and keep us out of recessions. When interest rates are low, banks are able to give out loans at a lower cost to the borrowers like you and I, allowing us to spend more easily. During the pandemic, the Fed lowered interest rates a lot to encourage people to borrow and spend that money. We're now nearly 2 years into this and interest rates are still low. People can take advantage of the lower interest rates by doing things like refinancing their mortgage, especially if they're still paying PMI or private mortgage insurance. So why do interest rates ever get raised? Because remember, the Fed is also in charge of inflation, not just recessions. When the economy returns to its normal strength, the rates need to be raised back up to prevent runaway inflation. So don't be scared when you read headlines like this one, or maybe this one, about the Fed raising rates again, because it's all part of this beautiful mess we call monetary policy. Quick heads up, this video is sponsored by MoneyLion. All content is for informational purposes only and should not be construed as financial advice.